Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, September 15th, 2016. I'm getting this out a little bit earlier than before the market closes, but it's probably going to end around the same where. But we remain in this all-in, all-out environment, and nothing has really changed. I had mentioned, I'm pretty sure a few times on here, but the problem that I have right now as far as what is going on is this could have been a wave A, this could have been a wave B, and we could have started a wave C down. That was one option. The next option was that, we made an A, and now we're making an A, B, and then a wave C somewhere up into this 2165. Maybe, they go a little bit higher, but somewhere in that area here. And then what happens is that's your wave B, and then we have a wave C that goes down. Either way, once the pattern, either way, whether this was the C or we had to come up or this was the C, then we should still have some more room on the downside. So it was, we were down 54, up 30, down 30, up 25 at one point. The moves are getting really, really big right now. We have a gap that's at the 2157. They tried to close it. They didn't. Most likely they're going to come up here and try to close that. If they get above this, the 2162, there's a chance they may come up and try to close this gap right away and come to 2179, 77, 2180. I'm not sure if they're going to be able to do it, but right now, if we just look at the technicals, you can see they're starting to roll over a little bit, and this is on a 15-minute chart. But we really don't have, any bearish divergences even on the 15-minute chart here. So there's, even if we get a pullback, most likely we're going to probably get another bounce back up, and you really want to keep an eye on the 2156 and again this like the 2164-65 area. This is the resistance zone, so if they push above that, they're going to come up and close this gap. That's really the easiest way to put things and look at this market right now is if they get above here, there's a real good shot they're coming up here. I think that what the bulls have to defend is this 2136. If they lose that, then this is the earliest cue that we're coming down to the 2118 and most likely taking it out, because this will be the almost third try that they're trying up here. And you're going to get a lot of people that once they break this support, there's going to get panic, and the next move is probably coming down, somewhere between the 2092 and the 2068. And again, just with this pattern, it actually allows all the way up to the 2033. And I showed you the longer term chart where we actually have 5 waves coming all the way from the 2009 lows, and that's looking for a much deeper pullback. But this is not a trading chart. This is just something, say, to keep an eye on, because I don't know if this one is finished or they have more work or whatever they're going to do. But once it is finished, we do have a larger move to the downside that is pending. So we have, again, really what I think that the bulls need to defend is going to be that 2136 level. If we start breaking through some of these moving averages, then I think this support is going to get busted again, just because they went once, twice. This is the third time. So if they come down here again, most likely it's going to break. But if we the daily chart, really, I'm sorry, hang on, don't do it. Okay, so the daily chart, there's not much really to go over. You really don't even have to look at this part right now. Actually, let me do this. This is silly. This is from the report, the marketing thing I did last night. So remove drawings. Yes. Okay. Sorry about that. So you can see we have the bearish divergences on the daily, and the technicals just started to roll over. So if this support gives way, let's say that the lows right here and the support right here, it's going to be a very, very fast drop. And like I said, we have a gap that's at this 2033, and there's a shot that it's going to come all the way down to the 1991. So right now, I've been saying, leave the door open for some serious chop, because that's just what this market's been doing. Even on the 60s, even with this move right here, we're still, they still have room to get up to the midpoint on the momentum here, but we didn't have any bullish divergences, so I wasn't really looking for this type of move yet. I was kind of hoping that they were going to make some lower low, but that never happened. They tried twice and then pushed it up, so we never had any bullish divergences. So there's a shot that right in this area could be it, and then we're coming back down. But I wouldn't really want to say that as far as making a trade, because there's still room in the tank for the bulls to move higher. We don't have bearish divergences on the 15-minute chart, so it's one of those things that we could head down, but there's a good same exact chance that we could head up and test these levels before we head down. So I'd rather see this to get into the overbought levels, and then also at least see some bearish divergences forming on the 15-minute chart before I really start looking hard to short. And then if we take out the 2136, that's when I may just jump on, because then I will assume that we're taking out this 2118 and heading down, probably down to the 2092 or even lower than that. So let's see the way it closes. I have to leave around 11:30 tomorrow. I have a golf outing. And with that, I'll talk to you guys in the morning, and have a great night.